Hi guys, it's Sam and welcome back to the UK Mortgage Centre channel, or if it's your first time here, it's nice to meet you. Now I'm assuming that you're looking at getting your first mortgage. Well, if you are, you've come to the right place, because in this video, I'm going to discuss how to choose your mortgage term and the differences between the long and the shorter terms. And look, now I've got your attention, do me a favour and hit the subscribe button below. It's free and that way you won't miss an upload. We tend to be here every Monday, unless I'm getting told off by Emma somewhere.
Just thought I'd jump on here while I'm editing and clear up the accusation that I tell him off. I don't. I simply get him to sit down and film, which can be quite difficult sometimes. Anyway, back to the video.
To understand your mortgage term, we need to understand the mortgage itself first. Now, a mortgage is just a fancy word for a loan that's secured against the property, which helps you buy a home. Now, you loan the money from a bank or building society, which we refer to as lenders. The mortgage term, that's really the period that you agree with your lender to repay the loan. It's like signing a contract with your future self saying, hello, I'm going to be paying back for the next 35 years, tons and tons of mortgage payments with a lot of interest, but we'll get to that shortly. Now, your mortgage term is one of the first things that you need to consider when buying your home. You need to make sure that your term meets your needs both now and what you think it might be in the future, taking into account things like your age and your financial circumstances of yourself and your partner if you're applying for a joint mortgage. Now, on average, most first-time buyers will take out a loan for around 25 to 30 years. If you're looking at it and you've asked your parents, they'll probably tell you theirs was about 20-25 years as well. However, mortgage terms can range from anything from 5 years all the way up to 40. So 25 to 30 years tend to be that little sweet spot as a mortgage is seen as a long-term investment. And when applying for a mortgage, it's worth checking out some of the repayment calculators to compare how long and shorter periods of time could affect the monthly repayments. By extending the loan period, you might be able to borrow more, but this will impact how much interest that you're going to pay to the lender. The longer the mortgage terms, the more interest you'll pay back over the duration of the loan. For example, if you're buying a home at 225 grand with, let's say, 10% deposit of 22.5 grand, and you secure a fixed rate mortgage of around 5%, if you choose to pay that loan over 25 years, your monthly repayments might be in the realm of 1,087 quid, which means the total cost of the mortgage is around 355 grand, assuming that interest rates never change and all that sort of stuff. If we minus 225 grand from the 355 grand, you get the amount of interest that you'll pay over the term in that example, which is over 152,000. And in the reverse, the shorter the term, the less interest you'll pay over time. However, the higher the monthly repayments will be. So let's look at that last example, but reverse it backwards. So again, using the same purchase price of 225 and a 10% deposit, with a fixed rate of 5%, but this time you choose a 10-year term, your monthly repayments are going to be around £2,150 a month, which makes your total mortgage around 257 grand that you pay over the term. Using the same calculations before, the overall interest that you pay will be around 55,000. So again, and that means the interest rates are 5%, they never change, all that sort of stuff. But how can you choose that mortgage term that's going to suit you? But everyone's circumstances are different. So what might work for you probably won't work for your mate. So it's really important to have that in your head. You might have a bigger than average deposit to put down, or you might have some debt that you want to repay whilst also repaying your mortgage. Mortgage lenders will consider your spending commitments as well as your income before deciding how much they're going to lend to you. And you can choose a mortgage term which aligns to your budget and what makes you feel comfortable paying that each month. So you can be flexible in the number of years or as random as you want to. So it might be like a 23-year term that you go for. But it's also worth noting that your mortgage term isn't always set in stone. You can overpay your repayments, on top of your repayments should I say, which will reduce the overall time that it's going to take to pay the lender back. Now most lenders offer overpayments of around 10% of the outstanding balance on your loan each year without having to pay a fee. Some will allow more and some will allow less. And you can also request a term change when your current deal is due to end, either with your current lender or a new one. Reducing or extending it is as needed and based on your circumstances at that time. So don't worry about it, we can help you get through that process. I know I've pretty much talked your socks off at this point and there's a lot of information to retain, but if you found this video helpful, please give it a thumbs up and hit the subscribe button. Until next time, happy house hunting, and as always, if you need anything from us, drop us a quick message.